Have you ever looked back at a company like NVIDIA or Netflix and thought, how did I not see that rise coming? Which stock should I invest in now to capture those kind of returns by 2026? Because right now, the greatest wealth transfer in history is underway. The market is leaving behind the companies focused on short-term profits and rewarding the ones building the foundational infrastructure for the next decade. If you are not invested in the 5 seismic shifts, AI power, chip wars, financial disruption, personalized health, and autonomous mobility, you will be left behind. This is the top 5 stock list for 2026, and the answers will surprise you. We start with Iris Energy, ticker IREN. The market still sees them as a volatile Bitcoin miner. Wrong. They have quietly completed a pivot, positioning themselves as a pure-play AI infrastructure provider. Their moat is simple: clean power. As the AI revolution chokes on massive electricity demands, IREN's strategy of co-locating data centers directly with 100% renewable energy is the solution. They are aggressively scaling their GPU fleet, including NVIDIA Blackwell and AMD MI350X chips, with a goal of achieving $500 million in annualized AI cloud revenue by Q1 2026. If power is the new oil, Iris is sitting on the cleanest, cheapest barrel. Next, we look at advanced micro devices, ticker AMD. The AI war is not over, and the market consensus that NVIDIA has a perpetual lead is the precise source of AMD's asymmetric opportunity. The $AMD thesis for 2026 is built on the Instinct MI300 series, which offers superior performance per dollar and high memory capacity for large-scale AI inference. Critically, AMD is championing the ROCm open-source software platform. This is the wedge to break NVIDIA's closed CUDA moat. With an aggressive annual product cadence and the MI400 series on the roadmap for 2026, AMD is no longer a challenger. It's the only viable competitor in a $1 trillion market. Shifting to financial disruption, we have SoFi Technologies, ticker SOFI. The market treats it like another fintech, but that view is obsolete. SoFi is an established, vertically integrated digital bank with one enormous advantage: the National Bank Charter. Acquired in 2022, this charter allows them to fund their high-growth lending products with cheap, stable member deposits, drastically reducing their cost of capital compared to non-bank rivals. This stability, coupled with their financial super app model and focus on cross-selling to high-earning members, gives them a pathway to sustainable high-margin profitability by 2026, moving them from a high-growth speculation to a core financial technology platform. In healthcare, we pivot to Hims & Hers Health, ticker HIMS. This company is redefining chronic care through a personalized, digital-first model. Their competitive edge is the ability to deliver specialized, compounded medications, like their effective weight loss treatments, directly to the consumer with high adherence and low dropout rates, bypassing the friction and cost of traditional systems. The moat is their strong brand, high customer retention, and the scalable technology platform that manages millions of patients for conditions traditionally plagued by stigma and inconvenience. With only a fraction of their 100 million plus target market currently subscribed, their expansion into new personalized medicine categories represents a multi-year growth runway that the market has not fully appreciated. Finally, the ultimate long-term platform, Tesla, ticker TSLA. To focus on vehicle unit sales is to miss the entire point. By 2026, the TSLA valuation will be driven by 2 non-automotive pillars: AI and energy. The data advantage from their global fleet makes them the leader in the full self-driving/robo-taxi race, transforming their vehicle into a depreciating asset that generates recurring, high-margin software revenue. Simultaneously, the energy storage division, Megapack and Powerwall, is accelerating, set to potentially outpace the growth of the auto division. As AI-driven data center demand strains the grid, Tesla's energy storage and infrastructure become vital to stabilizing the power supply, validating their status as a fully integrated AI, energy, and mobility ecosystem. These 5 companies sit where maximum leverage meets maximum opportunity. They are executing on secular trends that are irreversible, creating moats through technology, power, and vertical integration. The downside is priced in. The upside is still measured in multiples. That is the top 5 best stocks for 2026.